I'm Greg Hunter. Welcome to USAWatchdog.com. With us, a repeat appearance by our friend Bill Holter at JSMindset.com. He's got a lot to say about the metals. Just before we start, Bill, I'll bring you on. Bill Holter, thanks for joining us today on USAWatchdog.com. Just before we start, Bill, I just wanted to say you and Jim have been pummeled by the critics about how, gold's really not going to go anywhere. It's not doing anything. Of course, they had massive intervention in $21 trillion to intervene in the market, along with everything else that they printed up, the missing money, along with the 22 trillion that we already, 23 trillion we already owe. You guys are in the process of being proven correct that gold, now all the big investment people, I don't care if it's Ray Dalio, Gunlock, I don't care who it is, recently BlackRock CIO came out and said, you have to buy gold. You have to buy hard assets, including gold. Did I tell you to buy gold? So, you're being proven correct right now. Bill.
Well, yeah, all along it's been basically a mathematical formula. I mean, the only way the currencies, and now we're to the point where uh, interest rates are negative for 30% of debt across the globe.
Yeah, the BlackRock CIO came out and let me just make sure I get his name correctly here. It wasn't so much. I mean, we know this, this, people reading this know this, but what I wanted to kind of tell people. His name is Rick Reeder. He's a CIO at BlackRock, and BlackRock are the insiders of insiders, and he was talking about how the end game is going to be massive inflation. And what you're talking about with the currency is they can't let the bonds default. So they're going to keep printing money to pay them off and roll them over into negative world, right?
Exactly. And if you notice, the very last word of that article is a four-letter word: gold.
He says in his article, just so we bring the readers in. This is on Zero Hedge yesterday. It's he says equities, real estate, and even hard assets that have historic value, type in relevance, such as gold. I don't see how equities go to the moon if the bond market goes in the tank. I mean, I don't. That's the one thing I just can't wrap my head around. Can you wrap it around? You got a lot of trading experience in the equities market. Can stocks do great if the bond market falls on its head?
Uh, the answer to that is, in nominal terms, possibly yes. In real terms, no. If you go back to hyperinflations anywhere, I mean, look at Weimar, look at Venezuela, Argentina. Uh, Once the hyperinflation starts, stocks begin to go up. Bonds are wiped out because interest rates go up and the currency debases, so bonds get destroyed. Stocks begin to go up, and they look like a moonshot, like it's straight up. The problem is they go straight up half as fast as the currency goes down. So in the long run, what looks like a huge move is actually a 50% loss in purchasing power.
Can you explain this a little bit better than I did? And it is I cut out some of the treasuries, the seven, the 5, the 3. But here's the Treasury yield. I'm going to go full screen here on this, and it's if you take a look at this, the 1 month right here is at 2.05, and the 30 year right here is at 2.06. Why is this such a big problem, and how is it reflected in the world today?
Well, it's a big problem when you're talking about the 1 month, 2 month, year, 5 year versus the 10 year treasury. The curve has inverted, and I've said this before, that we have had recessions in the past without an inverted yield curve. That has happened. But every single time that we've had a fully inverted yield curve, every single time we've had a recession follow. So we're on our way into a recession, and you can see it. You can see it with trade numbers. Just look at Europe, look at Asia, and the United States is now turning down. This is happening at a time when the world there's ever been before. And a
Oh,
slower,
Bill, can you say this? Say it again. You froze up a little bit. This is happening at a time that we've never been before. Is that what you said? Start right there.
yeah, this is happening at a time when the world is more leveraged than it's ever been before.
Ah,
In other words, there's more debt in the system. And debt obviously has a carrying cost to it. And when economies slow or contract, it means that cash flow declines, making the debt service that much more difficult to service. And that's why interest rates have crashed. That's why interest rates have gone negative. They're pushing rates down. And that's another reason why we're looking at trade wars now, trade wars and currency wars, because the pie is actually shrinking, but the debt is not shrinking. The debt still has to be serviced. So what happens is every nation wants a bigger slice of the pie so that they can service their debt.
can you explain a little bit? You talked about this in the pre-interview, and that was the dollar. That the dollar is doing better, and we look a lot better than Japan and China. And people say that China's winning this trade war, but I think they're getting killed. But also Europe. I mean, it's all this negative. A lot of it's in Europe. Can you explain why the dollar is, almost touching 100 on the Dixie?
Well, what's happened is, as I mentioned, roughly 30% of global debt now is priced at a negative yield. So the world is starved for yield, and we can talk about what negative yields, if the whole world went negative, what that would mean to pension plans and things that are based on it. But with 30% of debt at a negative rate already, you're getting capital flows into U.S. Treasuries, and the reason being because they pay at least some interest. They're not a negative rate. Now, what that is doing is because the capital is coming into the U.S., it's coming into dollars, it's pushing the dollar higher, which also pushes the inverse of that is lower currencies for foreign nations. That lower currency is spurring people to move not only into treasuries, but the lower currency itself is spurring people to move into gold and silver. And I've had a lot of questions as to why is it that until recently this was not the case, but over the last month or 2 months, you've seen on days where the dollar's real strong, you actually see gold go higher. So
Why?
well, because foreigners are getting out of their currency and they're demanding gold and silver. So this is not a COMEX deal or U.S. demand. This is global demand from all over the world. People getting out of their own currencies because they're debasing and moving into gold. And really, the bottom line is gold and silver over the last few months have been the strongest money on the planet because they're not only are they going higher in dollars, but they're going way higher in foreign currencies. I think the last I saw there was 73 major currencies where gold is now trading at an all-time high.
And the gold silver ratio, you and Jim have said in the past that Jim is Mr. Gold, and I know you're a broker of gold at Miles Franklin as well, so you know all about this, and both of you also have deep experience in gold and securities and brokerages and the whole deal. But you have said that in the past that your estimation the silver is going to be gold on steroids. Now we haven't seen that yet, but we still got $19 silver. But go ahead.
You're seeing that as of right now, silver is actually stronger this year than gold. Wow. Not by a lot, by maybe 5 or 10%, but the move in silver has been literally only over a 2-month period of time.
Yeah, it's up about
And we
25,
posted a
26%.
chart yesterday at JS Mindset, the gold to silver ratio.
I got it right here.
Okay, yeah, why don't
I
you
went ahead.
show that and we'll talk about that.
Show me what this. I mean, I'm going to go to my thing, but here you. Okay, so I'm going to hold it up here. Here's the chart. This goes back to. Let's see. Make sure I have it right side up. I do. Okay. This goes back to 1998. This goes back
Okay,
to 2000. That's 98 up here, 2000. And here is the chart that you guys put up. And you said this
right,
is signaling a big deal for silver. Why?
right. Well, it's the gold to silver ratio, and you'll notice that there's prior to where we are now, there were three peaks, and what that showed was gold strength versus silver. And now all three of them peaked out at about the same level. This last time, it peaked out higher.
Yeah.
Right. And what that shows is silver became more undervalued. The gold to silver ratio actually went over 90. And what that means is it takes 90 ounces of silver to purchase 1 ounce of gold. So silver was at extreme uh, undervaluation versus gold. Now, the important thing of this chart is if you look at the bottom where you see the blue peaks and the red troughs,
Yes.
that's the MACD line. That's the moving average convergence divergence. Basically, what it is, it's a graph of two moving averages, one shorter than the other. And the shorter term moving average, when it crosses over to the upside, you'll see that there's several years, 2, 3, 4 years of outperformance by gold. And when the blue line on that, I think it's blue, when it crosses down, that portends outperformance of silver versus gold.
You've frozen up your. Go ahead. You froze up right there. Go ahead. And so start right there. Outperformance of silver and gold. A little internet hiccup. Go ahead. Start right there.
Okay, so where we are right now, the MACD has crossed over, and you can see that it's rolling over,
Oh, hold on.
which portends
Let me get back there. Okay.
probably, yeah, it portends probably 2, 3, 4 years of outperformance by silver over gold.
Well, and it come. Go ahead. Sorry.
I was just going to say, we're probably going to see at least 50 or 60 as the gold to silver ratio, and it may be lower than that. We may get into the 20s or 30s. But what it shows is silver is way undervalued versus gold, and that it should and it is beginning to already. It should outperform gold over the next few years.
And just so people know, just in nature, silver in mining, I should say, I don't know if nature is mining, but anyway, silver comes out of the ground at about 10 to 1 gold, 10
Right.
ounces, right? So there's your benchmark. So what's it come out of there? And then all the silver above ground, according to people like David Morgan and other people, it's all gone.
Right. It gets used. When silver gets mined, the majority of it gets used in electronics. It gets used in solar. It gets used in medical, etc. There's far more above ground gold than there is silver. The silver is there, but it's in cell phones, it's in cars, it's in the computer you're using.
And these people that are coming on, I mean, everybody, Ray Dalio, the Black Rock guy, I mean, I brought it up because it's like everybody knows, buy hard assets, but all of a sudden you have people like Ray Dalio, who runs the biggest hedge fund on the planet, writing articles about buy gold. Did I tell you to buy gold? Buy gold. You have the head of the CIO, the chief investment officer of BlackRock. And they're certainly, I call them the insiders of the insiders, but they're certainly on the insiders club. And they're telling you to buy hard assets, land, I guess artwork, gold. Did I tell you gold? Gold? Did I tell you some gold?
Well, they understand that this is going to be the biggest monetary debasement in the history of history. They understand it's hyperinflation on its way. And they are late to the game, and they do manage billions and billions of dollars. And I don't see how all these people that are talking about buying gold, buying silver, are going to be able to get actual physical silver, physical gold in their hands or vaulted. I mean, they're going to do it through OTC derivatives. They're going to do it through ETFs, etc. Interesting so far this year, Greg.
Wait. I want to explore that. They're going to do it through derivatives and GLD and paper, and aren't they going to get creamed?
Yeah, they're going to get wiped out.
Why?
Because, and I've talked about this for, I don't know, 4 years, 5 years, that there's far more paper contracts that are sold short than metal actually exists. I think the number got as high as 500 to 1. In other words, there were 500 paper ounces of gold sold for every 1 real ounce available for delivery. And what I was going to get at to illustrate this, so far just this year, the exchange for physicals that have been sent from the COMEX to London for gold, they've already EFP'd 4,200 tons so far just for the first 8 months.
What's EFP?
Exchange for physical.
Uh-huh. So they already cashed that 4,000 tons just this year.
They don't have the inventories to deliver. So what they're doing is they're sending them to London. And there's really no way to track whether they get delivered or not. But the point being, that's 4,200 tons in 8 months. The world only produces like 3,400 tons total. And if you take out Russia and China, which do not export, the whole total for the year is 2,800 tons. So 6,000 tons EFP'd.
Hold on. Say it again. So the whole total for the year, you just broke up a little bit. So the whole total for the year, if you take out Russia and China, is 2,800 tons, not 4,200 tons. Okay, so start right there. You just broke up. Go ahead.
So it looks like we're going to end up with over 6,000 tons of EFPs, in other words, demand for delivery, in a world that's only producing 2,800 tons. And in silver, it's worse. In silver, so far, just in the first 8 months, there's been 1.6 billion ounces EFP'd. So that number is going to end up about 2.4 billion. The world produces less than 800 million ounces a year.
Wow.
So what the bottom line to what all this means is there's going to be a failure to deliver. And once there's a failure to deliver, only the Lord knows what type of numbers we're going to be looking at as far as pricing for gold and silver.
Much higher. I had Wayne Jett on, and he was talking about, and he's a smart guy. I mean, he's really a smart guy. He's talking about the, he puts a very different spin on the trade imbalance. He says, listen, if the president needs to get away from the Federal Reserve notes, he's going to have to balance the trade. He can't have this big lopsided China balance of trade stuff. And I said, well, some people say it's going to go up really, really high. And he said, oh, it can't go high. People would be crushed by it. But I'm not sure he's right about that, and I'm not criticizing him. I just got you on, and you guys have done the numbers on the math, and the math is stunning if you just look at the numbers. They sound almost like wackadoodle crazy, but you came up with $87,000 an ounce based on 8,000 tons. Do the math on that about how big this could be.
Yeah, if you take just the on books debt of 22 trillion. And you divide it by the amount of ounces that the U.S. supposedly have, which is, I believe, 261 million ounces, the number comes out to $87,000 an ounce for the gold that we supposedly have if it were to extinguish the debt that is on books. Now, that doesn't even take into account Social Security, Medicare, loan guarantees, etc.
Missing money.
Right, missing money. It doesn't account for any of that. It only accounts just for the on-books debt. To extinguish that, the gold that we supposedly have, which I highly doubt, I'm sure that has been encumbered, it's leaked out the back door, but assuming we have all the gold that we say we have, it would have to be $87,000 an ounce to pay our debt off.
And this little math equation has been used in the past by none other than your business partner, Jim Sinclair.
Right.
Back in the day when gold was at, I don't know, $30 or $40 an ounce. I think he did this in '74 and said, "Hey, it's going to top out at around $800 or $900 an ounce." And everybody thought he was a fool then. Which, of course, I think it topped out the intraday high at 887.50, pretty close.
Yeah, his number was 900.
Okay, so
And interesting that in, I think it was 2003 or four.
so he used this equation, this what people might think is crazy, before, and he became a very wealthy man.
Right, he had more COMEX gold contracts open than anyone I think had ever had before. And it's also interesting. People thought Jim was a nut job back in 2003, 2004, when he talked about 1650 gold by January of 2011. Well, he missed it by 6 months because it was late June when it hit 1650 of 2011.
Yeah. I mean, yes, that's right. He was by six. Pretty good starting in 2003, and said by January 2011 it'll be
Yeah.
this much money, and he missed it by 6 months. Wow. I mean, here's why I'm bringing this up. This math, these computations aren't crazyville. They've been used in the past to make a lot of money and to be pretty dang accurate. And now, will it go to $87,000? What will the Federal Reserve do? What will the U.S. do? What will the world do? I don't know. But what we're saying, what this is pointing to is at what is it, $1,500 an ounce, a little over $1,500 an ounce, and silver at close to $19 an ounce. That's not way high. That's way low. Is that interpretation for it?
Yeah, they're ridiculously low numbers. I mean, when all is said and done, if we retain the current dollar, which I'm not so sure we will, but in current dollars, you're going to have to add zeros after the current prices to adjust them to be fair value versus dollars.
And they're not going to be able to stop this, can they? I don't know what the world will look like at $10,000 or $20,000 or $80,000 gold. I mean, boy. I mean,
they've already, if you want to, use the word stopped it. They've already stopped it for quite a few years by using COMEX contracts, selling naked contracts short to dilute the price. They've done that for years and years. But now we're at the point where the physical demand, where people put money up and say, I want the metal, is overwhelming the physical available supply. And COMEX will be busted. Jim has even talked about, you could see the COMEX price of gold and silver totally collapse. You could see $10 on gold. You could see $10 offered and nothing bid, because it's a paper contract with nothing behind it. And as Jim points out, what's the value of a contract that can't perform? The answer is zero. But yet in the real world, with a $10 price on COMEX gold, you could have a $50,000 price on physical gold. It could be much higher. Jim came out with $50,000, I think 4 or 5 years ago, and I contacted him and I immediately wrote that $50,000 gold may be stupidly cheap.
Man, you don't think that they're going to be able to? So you're of the mind. I just want to make sure I wrap this up and get this right. You're of the mind that the manipulation phase is just about over, because so many big investors, like the CIO of BlackRock and like Ray Dalio, they've already done. If they're telling you to buy gold, they've already bought it, or they're in the process of buying it.
But Greg, most people that are watching this, I'm sure that, I mean, this goes all over the world. So there's foreigners watching it, but the bulk are probably Americans, and Americans think U.S. centric. And to this point, the COMEX via derivatives, via paper contracts, have priced, or I should say underpriced, suppressed the price of gold and silver. What's happening is we're having a global wave of capital looking to get into gold and silver. COMEX can't stop that, because foreigners, they don't buy contracts. They don't buy COMEX contracts and try to make, a few dollars over a couple week period of time or over a 3 month, 6 month period of time. Foreigners buy gold, they buy silver, and it's gone. It's hidden. It's buried. And that's real demand that COMEX is not able to deal with as far as pricing.
And you think it breaks up this year? I mean, do you think that they get overrun this year?
Well, whether it's this year or the first few months of next year, it doesn't matter. It's going to happen. It's a mathematical certainty. There is more demand than there is, certainly than there is inventories anywhere to meet the demand, but there's also way more demand than there is global production.
Yeah.
The supply in no possible way can meet demand. And, I've taken, if you look at the comments section of interviews or articles that I've done, you have the troll community going nuts saying, I'm crazy, anybody else is crazy, there's never going to be a default. In my business as a broker, you almost could never use the word guarantee, but I can basically guarantee there's going to be a failure to deliver. And that failure to deliver is going to unmask and scare the crap out of the entire fractional reserve banking system, the fractional reserve commodity system. The whole thing's going to come down in a panic because somebody gets a failure to deliver.
Is that why some of these big people are freaking out? I mean, I'm hearing more and more articles and more big people, big investors that are this ominous tone. Stock market goes up 400 points or down 600 points or whatever. I mean, it's just really bizarre, weird. We did get some good numbers. Listen, I think Trump's done a fantastic job. So I don't want people thinking, "Oh, you're a Trump basher." I'm not a Trump basher. We'd be in a depression if it wasn't for him, and he's been under constant attack.
Be in jail. You and I would be in jail, and a whole bunch of our friends would be in jail.
But he's going to pull something. I mean, at the end, he's not going to try to liquidate all this debt. I think he's going to default on it. I mean, he's going to have to, isn't he? Isn't that how the debt picture also ends? It's really not just inflation. That's kind of wishful thinking. It's a carnival of default and inflation. Isn't that what it's going to be? Isn't that what it has to be?
Trump is, if you listen to really what he's saying, Trump wants a lower dollar, and how much of a lower dollar does he want? He's talking about debasing the currency to make the debt payable. There's only two forms of default. One is outright default, you don't pay, and the other one is you pay with funny money. And that's what I think that is the most palatable way for any government to deal with their debt, is to debase the currency and pay it off in monkey money.
Well, Martin Armstrong says the same thing you do. He says that they want a lower dollar. If he gets a lower dollar, things are going to be great. I mean, I'm sure that the whole plan really at this point isn't the long-term plan. It's to get past November of 2020 for the presidential election. And if you look what's going on in the Democratic Party, I mean, about Bernie Sanders saying we ought to have, global abortion to protect the climate and stop using straws and stop using fossil fuel. I mean, 7 hours of this insanity, hosted on the communist news network, Crazy Time, CNN, which I used to work at. I'm like, that's the people you kept. You kept those people. I'm so glad I'm not there. But anyway, the political landscape. A few comments on that. I mean, I don't understand. Now they're going after, the left is going after Joe Biden. And what does that leave you with? Liawatha and Crazy Bernie? I don't know. I mean, can you give me your handicap what's coming up in 2020?
My handicap, I would say that of all the candidates there are right now on the left, none of them will be the nominee.
Really?
Somebody else has got to come in because they're all whacked out of their minds. Free this, free that, wipe out the school, university debt, wipe out health debt. I mean, you can't do that.
You just had Schultz, the former CEO of Starbucks, said he's not going to help Trump get elected. He's out. Anybody who's remotely sane is dropping out of the race. I mean, they're all Marxist, communist. I mean, Hickenlooper is Marxist communist light. He's out. Everybody, John Yang, he's total suppression of free speech and universal basic income. Andrew Yang. I mean, I'm looking at this going, they used to have to uncover this. Now they're bragging about it. They're bragging about the crazy.
Greg,
It's
more than half of the United States population still has some common sense. And if they've got absolute lunacy, there's with the current candidates, I think there's zero chance that Trump could lose, even in a recession, even if the financial system has come down, because what they're talking about, like you said, is pure Marxism, and anybody that can halfway read can understand that socialism does not work.
And Marxism comes at a high
misery.
price. If you could just talk to the 100 million people that the Marxists have killed globally to get their crazy time across, right?
Well, and that's I'm kind of getting off the subject, but now all this talk about gun control. Think about where the greatest genocides in history have been. They've always been against populations that have been disarmed.
That's right. That's what they did with the Jews. That's what
Anybody who
Pol
turns
Pot.
a gun in has got to be out of their mind.
I know. These people are communists. Bill de Blasio is talking about the little babies and children. He could care less about the children. He's a communist. He is a communist, and this is their playbook: to disarm you and then total tyranny. This is what the whole
Right,
climate thing
disarm
is. Right.
Disarm you, and then you do what they say you have to do, or you're dead.
And all this, it really interplays in with why the price of gold is going up, why the global financial system is melting down, why we're having so much angst. Everything isn't pretty. People aren't flush with cash and going to the grocery store and everything's fine. I mean, this is why we are where we are, is it not? Because of the overall economy and the debt.
Well, yeah, it's basically because there's too much debt; it can't be serviced. But people talk about gold going up or silver going up. Gold and silver, an ounce of gold today maybe was minted 100 years ago. It was an ounce of gold then, and in 100 years from now, it's going to be 1 ounce of gold. Gold does not go up or down. Gold is a fixed weight. What goes up and down is the currencies. And what's happening is currencies are going down. That's why the price of gold is going up.
That pretty much is it. And boy, they are scared to death to let any of this debt default. They are gonna pay it. They're gonna print it, and they're gonna pay. Right?
Well, yeah, they're gonna print and they're gonna debase. I mean, that QE to infinity. That's what it is. And what's the reverse of infinity? Zero. That's the value of these currencies.
We'll leave it at that. Bill Holter, you're at jsmindset.com. I've been reading it for years. Your business partner is Jim Sinclair. Fantastic guy, very smart. Both of you guys very smart. You also have a subscription service. I think it's now $129 a year. You get you get your private writings, some of the stuff you post on the site, which is nice of you. You also get writings every week from you and a podcast. Explain what people get for the yearly fee.
I do a couple, generally 2 writings a week, sometimes 3, sometimes 1, but I write a couple times a week, and we do a weekly 1-hour interview, myself, Jim, a fella named Dave, who was or is the smartest client I ever had when I was a broker, and then we've got somebody, Denny, who's a great moderator. I moderated for a while, but I'm a knucklehead at it, so it's finally gelled and come together. They're really good calls, and we go anywhere and everywhere. I mean, we've been taken down from YouTube for some of the stuff we've talked about.
Oh boy, yeah, now you know you're good.
Yeah, that's a badge of honor.
When they're listening to you and going, oh, people can't hear this. You know, you got to take that down. So, that's
And you being fired from CNN is a badge of honor.
well, yeah, they didn't like it. They didn't like it. I always keep watching the people on CNN and go, wow, that's who they kept. Holy cow, Don Lemon. Wow,
Well,
Andrew
Greg,
Cuomo.
you, and I've told you this off the air, but you are a journalist.
Thanks.
You are a true journalist, Greg.
You're very kind, Bill. You're very kind. I just get good people to talk and let them talk, and try not to interrupt too much. This is live, so I can't edit out the mistakes. So a lot of people don't understand that. I mean, I cut off the front and I cut off the back, and boom, there you go. You get the whole deal. But anyway, Jim Sinclair, great over there at JS Mindset. Tell him I said hi. Bill Holter, thank you very much for coming on. I'll put up your subscription page, of course, jsmindset.com. Very interesting article to peruse. A very interesting site to peruse with the articles and the commentary, the little staccato commentary you guys put out there, which is like it makes it very, very illuminating. Thank you, Bill Holter, for joining us today on USAWatchdog.com.
Thanks for having me back, Greg.